Hello and welcome to this tutorial on Japanese candlesticks. Japanese candlesticks have been around for many years, and they were introduced by a guy called Nissan more so in sort of the late 80s, early 90s, and they became prominent more towards sort of during the 90s. Whereas now they are used by over, I would hasten to say, at least 90% of traders use Japanese candlesticks to trade and to analyze the market. And in this video, I aim to give you a brief glimpse as to why that is, but also a tutorial on how to read Japanese candlesticks. You have to understand, of course, that the whole Japanese candlestick method really can't be encapsulated just in one video, because there are entire courses built around understanding the nuances and the shapes and sizes and patterns that Japanese candlesticks form over time, and there is no way that we could cover that in just one single video. However, the important thing that you need to understand is how candlesticks are made and what each candlestick represents, both as a bullish candlestick and that of a bearish one too. And once you begin to understand what and how candlesticks are formed, the rest in terms of what the patterns mean, what certain particular type of candles can mean, become relatively straightforward. But they are so many and varied that, as I've suggested and stated, that you would need to look beyond just this video if you were going to take Japanese candlesticks as a main form of your trading. But this video does explain how they are made and gives you a good platform to build from. So what is a Japanese candle? Well, they're possibly the best form of gauging the market sentiment for a particular stock on a particular day and overall than any other form of representing financial data. And there is simply just two forms of candlesticks. There are bullish candlesticks, which are the ones that we have here on the left, and then there are bearish ones, which we have here, here, and here. Now, bullish candlesticks are usually represented by a non-color, so they're usually represented in white, whereas bearish candlesticks are usually represented in a solid color. This can either be black, or sometimes, as we can see here, it's represented more clearly in red. So how is a candlestick built? Well, if we use this example of this candle here, this is a bullish candle, and we can see immediately why it would be called a candle, why we would call it a candle. Basically, we have a wick, which is the line running through it, also known as a shadow. And then we have the solid body, which, if this was a candle in real life, you would say this was the wax body, the round cylindrical body of the candle. But a Japanese candle, in the sense of trading, represents so much more than that. In terms of a bullish candle, again represented in white, the market opens at the bottom of the whole body of the candle and then closes at the top of the body of the candle. So the market opened in this case around about 11:17, 11:16, and closed around about 11:40. But you also note that there's this line running through it, also known as the shadow or the wick. Now, I prefer wick because that kind of represents and works more with what candles are. Just seems to figure. And what the wick represents is the intraday movement of that particular day's trading. So the intraday movement actually went lower around about 11.14 and actually went higher up, say, to 11.5. So not only did we get to understand where the market opened and where it closed, but we also get to see how high the market moved during that day and how low the market moved that day, giving this representation of a single candle. Now if we look at a bearish candle, they look very similar, obviously a different color, but they are read slightly differently, and it would make sense. The open for a bearish candle is at the top of the whole body, the solid body of the candle, and the close is at the bottom, because obviously it's a bearish move, so it's opened, its open was much higher than its close was. Otherwise it wouldn't be a bearish candle, it wouldn't be a red one, it would be a white one. So it opened at around about 11.15 and closed just shy of about 11. It opened at around about 11.40 and closed at around about 11.16, somewhere around there. And again, very similar to what we have with the bullish candle, we have the bearish intraday move, which is read the same way. So read the same way as the bearish one, in that the market went to around about 11.50, and then was at its lowest around about 11. So we have this huge intraday move, but the market closed at around about 11.15, 11.16, but opened at around about 11.40. So as you can see, we have quite a large representation just in one single shape. Now, what these shapes combined can do can show sentiment. For example, here we have what's called an engulfing candle, where there in fact is no wick. And what this represents is a very strong bullish, and can be a red or a black color full and be a bearish move as well. But what they represent is that it was a very strong bullish move in this case, in that the market opened at this point and closed at this point, but there is no wick. Why is there no wick? Well, quite simply, there is no wick because it opened and didn't go and the intraday trading didn't go below the open price, and it closed at its highest price, so there is no intraday movement above that, and this alone signifies a very strong bullish move. These can sometimes be represented as a very strong bullish move in terms of a trend when you see them usually as part of a trend as well. They sort of indicate strong moves within a trend, and you know, sort of similar to what we have here, but you would sort of see these sort of stacked together sometimes. And they're not that common, but when they do, they can be very aggressive, both bullish and bearish. The other forms of candle that you can see is that they do show sentiment in terms of turning within the market. And one example is we have here, and these can be represented in both sort of supports and resistances. We've got a resistance being represented here at 12. And the reason I can know there's a resistance there is because we have this bullish move here, which the intraday move sort of touched at 12, and then the following day we have what I would deem as, or call, a very thin market, where we have virtually very little trading in terms of the open and close, which gives us this very thin body, but quite a lot of movement which is predominantly negative. In other words, goes way below the open price and gives us this kind of hammer shape. Now these bearish candles can, because they're deemed as like a bearish trend reversal sign, is that or a bullish trend reversal, because we're moving into a negative trend from there, getting a retracement from that, is that you can easily remember this one because it looks a bit like a hammer, and they actually call it a hammer. where it's hammering out the end of a trend. And they usually represent a very strong bearish move from that point. The converse is true, as if you see one at the bottom of a trend at support, and they can also signify a possibility of a bullish move upwards if they're at the bottom near a support. These can also be referred to as shooting stars if the intraday if the open and close was at this point here, and it was a bit further up above the candle we have on the right, and they can be also referred to as shooting stars, and they have the same effect as we have with hammers. But basically the principle is that we expect a very strong bearish move after something like this, and basically all it is saying is that there's very little trading between the open and close. They were very close together, but there was a lot of predominantly negative intraday trading. This is basically suggesting no one is expecting it to move above 12, certainly having reached the previous day where it was closed near at 12. So there is a very strong resistance there. No one really wants to buy the stock or that security at that point because it's very thin, so there's no actual real movement in the price between the close and the open and the close, but there was a lot of movement negatively shown by this wick to show that it was predominantly bearish. So I hope that just gives you a brief idea on some of the power that you can get with Japanese candlesticks. There's an awful lot of free information out there on how to read Japanese candlesticks in terms of the patterns, and there's some exceptional books out by Neeson that you can read and get from Amazon and so on. So I would suggest, this tutorial is pretty much enough to keep you going, because the actual principle behind Japanese candlesticks is relatively simple, and once you understand how they work, then understanding how they work in terms of patterns overall and seeing the patterns becomes a whole lot easier. But as I've suggested, I would recommend reading a lot more about Japanese candlesticks, because they are fascinating and they are an excellent sentiment indicator too. So that's Japanese candlesticks.